Good morning, good morning. It is 7:40 a.m. Monday, October 31st. Happy Halloween to everyone. Hopefully no one gets spooked and gets their candy stolen by the markets today. Don't rush into the trade. It is the end of the month. We are coming up to a very important risk event, that being the November FOMC on Wednesday. So remember that the major fundamental catalyst running the markets right now is the Federal Reserve rate hike cycle. So investors will be waiting for Wednesday, for the FOMC, for Jerome Powell himself to come out with some sort of, for the sentiment, for any forward guidance. How much are they going to raise? They're expected to raise rates by 75 basis points. First of all, are they going to raise by 75 basis points? Second of all, what is the guidance for the December FOMC? What is the guidance for the following pace of rate hikes? How long are they going to stay? Is there going to be any pivot language, quote unquote, as there has been some rumors of Fed slowdown? So this is going to be a huge event coming up later this week. So keeping that in mind, Monday, today there's nothing really other than this PMI data, Chicago PMI, expected to have a slight rebound from previous, but not expecting this to have a huge impact, as again, this is minimal based on what's going on Wednesday with the FOMC. Just knowing with the market timing, end of month, important data coming out next on Wednesday, investors aren't going to be positioning themselves in the market prior to a major event like that, right? So expecting low volume and volatility just based on the market timing today. However, looking at the dollar, we are maintaining this bullish structure, right? So we know the dollar has been bullish for the entire year since the Federal Reserve rate hike cycle. But we've been playing this pullback from these highs, currency interventions, dollar weakness, good economic data bringing weakness to the U.S. dollar, and bad economic data, right? We had the PMIs coming out negative. We had a bunch of data coming out negative. But towards the end of last week, we started having the GDP. The GDP was the first data last week that was positive, that came out 2.6%, showing a rebound in the economy. Dollar bulls back. And then we had PCE by the end of the week, and we had high PCE showing inflation still very high, increasing from previous. So we had more data that is supporting our main macro sentiment, showing that the Fed has still a lot of work to do. They still have not achieved their goals of bringing inflation down to 2%. And they're still going to have to raise rates and keep rates high, which is keeping the dollar bullish now within this pullback. I'm still considering this a pullback from this entire move because we've barely corrected 50%, and we can end up just coming back up to this level and then having further rejections and potentially a double bottom or higher low, depending on the FOMC this week, right? But so far, I'm going to be playing this US dollar strength as we have consecutive higher highs, a nice higher low printed overnight, and London session candles breaking back above this previous high level. And we've just had this retest, and we are maintaining above this level. So dollar bulls are holding some weight right here. You can see that on the 1 hour time frame, this 4 hour break of structure. So I'm going to highlight this zone. As long as we maintain above this structure, dollar bulls are holding the most weight. Now, it's interesting to see now as I move on to the equity markets, as the equities are actually holding more optimism. So there's a little bit of a disconnect between the dollar bulls and equity bears, as the bears are not stepping in right now, right? The VIX is showing very optimistic sentiment as we've had continuous lower lows, lower highs, and previously a very impulsive lower low breaking past these previous lows, 28.5 area. And even if we've had this spike to start the week, we're still holding below previous key levels and showing optimistic sentiment. And looking at the US 500, we've been playing this optimism and this pullback structure, creating higher highs and higher lows. And then we had the initial reaction at the daily break of structure, came back down, grabbed more liquidity, and with the rumors at the end of the week of Fed slowdown by BlackRock, caused a massive, well, not massive, but a significant surge in stock markets as investors anticipate a potential Fed slowdown or Fed pivot, as was said by the economists in BlackRock. Now, this is really interesting to note that we are maintaining bullish structure, bullish pullback structure on the stock markets, but we are still below higher time frame sell zones. Right? If I go zoom out to the daily time frame, this 3,900 level is a very important sell side liquidity zone. So based on the higher time frames, if we maintain below this level, we're still extremely bearish. We're still playing that macro sentiment holding the most weight, and investors are still not totally convinced that this bull market is going to continue. Still not convinced that we have enough. The rumors aren't holding enough weight to continue above this level, and maybe we're not so convinced that this is a bottom, right? But coming into the 1 hour, there's no real volume as expected, end of the month, and we have a lot of information coming out, the November FOMC. There's not a lot of volume. We're having a little bit of a pullback here, but we are still maintaining bullish structure. And there's no clear sentiment to start off the week on Monday, as dollar is holding strength, but we have the conflicting information that the stock markets are also holding strength. Right? So if we had one-sided sentiment, dollar strength, equity weakness, we know, okay, macro sentiment is in play. We could play some gold sells, we could play some stock market sells, we could play some GU sells. But as of now, we don't have that clear sentiment. We've got some conflicting information, and it is to be expected as, again, investors are waiting for Jerome Powell himself to come out and say, either bring some pivot language or bring the heat and say what we're all expecting, since inflation's still way too high, the labor market's still very strong, we still got a lot of work to do to bring inflation down, so we got to keep the rates high and watch data as it comes in and keep on the path. So having said that, on gold, we had an initial break to the downside. See, on the 4 hours chart here, we had from the higher time frame double bottom in 1620, we had some pullback structure, new higher highs formed, but rejecting previous higher time frame or 4 hour order blocks and rejection levels to the left here, and rejecting that, not having enough buy-side liquidity to continue, actually creating some lower highs on the 4 hour, another lower high, and then a break to the downside, filling this entire range, correcting this last bullish move here. Right? We corrected that bullish move, but right now we are stuck within this range. So right now, conditions are not looking the greatest to take a trade, but what I would be looking for to validate that, to validate sells on gold, I would need price to come. Hold on. I would need price to come right back below this 4 hour demand level, right back below, and then start forming some lower time frame resistance, double top potentially below 1638. So potential sells below 1638, but I'm not going to rush into any sells above this 4-hour key level. Right, on the 1-hour time frame, we do have some nice structure here. Right, this new lower low, lower high, double top on the 1-hour right at our previous 4-hour key level. Breaking to the downside, now retesting, leaving a little bit of a wick here. But again, taking sells here would be not ideal in my mind because we're still above this previous 4-hour demand key level, and we can end up just coming back down, creating some support here, and then ending up ranging as, again, my expectations are of low volume and volatility. There's no clear one-sided sentiment right now. Everyone's waiting for Jerome Powell. So I'm not going to be taking any trades at the 1-hour break and retest. I will take it below this 4-hour demand if we have dollar strength continue, if we have equity bears, probably at New York Stock Exchange open at 9:30. If we get a big sell-off and we see gold coming back down below these levels, then we could see a shift in sentiment, and then we could see investors are starting to price out those pivot dreams, those delusional slowdown hopes, and we could see the bears coming back. So I'll be very cautious today as market timing, as I mentioned, and waiting for more clear confirms of investor sentiment before taking any sells on gold. So that's it for today. Trade safe.